members. Wanted to talk to you a little bit about YHOO, trading YHOO from a visual perspective. Now, this is going to be much more applicable to you if you are a MotiveWave user, because this tool is a very exciting MotiveWave tool. Now, this video is, of course, in YouTube, but it's also on the blog. And if you log in after you look at the video and you are a member at silver or above and you do have MotiveWave, I'm going to release the parameters that I have using this particular moving average ribbon. This is actually called the Rainbow C, and it is very, very useful. Now, I'm going to back up a bit and I'm going to look at the 4-hour chart. And what we are going to do, now listen, I do want to tell you, most all of my trading is based on a combination of price action events as well as momentum events. And price really is a very, very important thing that we have to look at. Now, what I've noticed is with traders, they have a tendency to perform or take triggers based on visual things that they can see. And so what I've been trying to do is work on visual events. This is going to be a big part of the fast track in the fall, because we're going to look at this. We're going to look at 4 different ways to trade systems, and one of them is going to be visual, right? It's going to be completely visual. You're not going to be looking at anything except 2 combinations, and the 2 combinations are going to be as follows. If you are looking to swing and you've got your fingers on this ribbon here, what you want to do is allow it to get over the front ribbon, the one in very light yellow, or actually this thing actually comes in all different colors. You just want to use the front one. I have customized this to go from light yellow to red, simply because it's attractive to me and I can actually see what it is that's going on. Couple of simple rules. When these things are flat, you know that there's a lot of sideways choppy action. You'll also see the SMIs get flat and the MACDs get flat. But as long as they are above 0, both of them, either the SMI or the MACD, you know that the momentum is moving to the upside. So here's where you take the trade. You watch it cross over that front one. You wait for a confirmation candle, and if the confirmation candle prints and you have a MACD or an SMI above 0, you can take the trade. If it's just barely at the line here, you might want to wait until it does get above 0, and then you can take the trade, and you can hold it until it breaks. Actually, if you want to give it a lot of room, you can hold it until it breaks the red one. But for me, I like to make it get to the middle of the band or so, and then I'm going to leave it alone. Right now here, you can see what that does is shake us out of the trade and then pop us right back in as it bounces and holds off of the level right here. Okay, so one of the things that you can look at if the chart's really trending is to wait until it gets past the very last ribbon before you get out of the trade. If it prints down there, under there, you're going to have that set as your stop. Okay, so we've got the nice sideways ribbon. The goal is you look at it, let it confirm a candlestick. You look down here. Is your MACD above 0? If the answer is yes, you can get in long. And you're going to stay long until it loses that red line. Okay? You're going to stay there until that's going to be the easiest way for you. So if you do that, you can see that you stay in all the way until here. And it breaks the red line. You're going to have a hard stop giving you this trigger. The beautiful thing is that MotiveWave can help you with that event. What that'll tell you is, here's where the MACD gets below 0, right? You can get a trigger in MotiveWave to tell you to do that. So this actually gets you out of the trade here. Same thing, see the top ribbon, confirmation candle. Notice this one. It breaks down, but it does not print a confirmation candlestick underneath that ribbon. And so you wait till here, it gives you the confirmation, you move all the way down. When it crosses the red, you know it's time to go, right? On top of that, the MACD begins to turn into a positive one. Now notice this. Here you have the crossover event. So legitimately, you can look at a confirmation here and say, if you weren't short, you could look at the confirmation here and say, you know what? This candlestick here tells me I can go long, right? So you can flip-flop back and forth. If you don't want to use the red line, you can use the midline, but that midline will chop you up just a little bit if you're using that. So it's better to use the red line to help you, all right? Or the very last line in the ribbon. So you get it. If it's above there, all of a sudden you say, you know what? This would not have given you a trigger to go long anyway because I'm sitting here under 0, right? If I'm only looking at the ribbon, it'll say, yes, go long, but my SMI is not above 0, so I really can't go long. So I can do it here, and I can take the trade. It's still a little bit nominal because there's fluctuation in here. But you will notice that fluctuation ends up giving us sideways action, and we know that when momentum flattens out, we're going to get nominal trades. Now, what's beautiful about this particular setting is that it works for the swing event very cleanly, and you can set up actual triggers again in MotiveWave to help you with these ribbons if you're not staring them down. But it's 4-hour chart, so you can look at these charts maybe twice a day to figure out where it is that you're going to get involved, and that's very good for the short-term swing trader. Again, the appeal here is that it's very visual. I do want to share one thing with you. This is very, very important. You do not want to take a trade in the direction of a gap unless the follow-through candle is confirming. And if you're looking at a 4-hour chart and the follow-through candlestick, which I would if I were swing trading, and the follow-through candlestick is either giving me a lower low or a higher high or both a lower low and a lower high, then I do not want to be involved in any kind of long. By the same token, if it drifts here and I have a confirmation candlestick that tells me, well, you know, I am short, I can take this chart short, right? Particularly as my SMI drops below 0, and that's the fast. I have a faster SMI and a slower SMI. That fast SMI is going to help you significantly time your trades on a 4-hour chart. It's also going to do it for you on a 30-minute. But as you can see, this is going to keep you in the trade short. All right? And the second that this starts getting above 0, you know that it's going to be time to get out of the trade. Now, because this action is essentially flat, this may end up being a nominal trade unless you pay attention to where relative support and resistance sits and you try to take some profit. All right, let's jump right into the 30-minute chart and take a look at how we would trade this ribbon intraday. And again, absolutely beautiful. If you want to take a look at this, you want to take a look at the same thing. You want to look at that front ribbon, and when it drops and confirms, you want to look down there and see that you're sitting under 0. And if you're sitting under 0, you can take the trade. If you are not sitting under 0, you run the risk of getting chopped up. But if you've got slope, particularly in the SMI, you know it's going to follow through. So you're going to take it there. You're not going to get out until it breaks the red ribbon, right? And if you want to, you can wait for a confirmation of the red ribbon to get out of the trade. But you can know this for sure. With this kind of ribbon, if it begins to pierce, you know the move is about to be over. Notice the piercing here and the piercing here, the move is over. So this is a beautiful ribbon. I finally have got the settings worked out on this. I am very excited about it because it allows the trader to have a visual trading event. And so many of us are really much better at using visual events. Now the fact of the matter is, what these visuals do is measure the momentum. And that's really what we care about, how momentum gets measured. And so if you do have MotiveWave, you want to log in and get those levels from me so that you can set this ribbon up. And you know, if you want to take a little time and get it into a color that's fun for you, maybe you like blues, maybe you like whatever, doesn't really matter, but better to have them in different colors so you can see the changing of movement and what you need to do. Big things to observe. When these ribbons get flat, you are not to be involved. When they get very tightly bound together, you should be out of the trade or preparing for the trade. And when they expand very wide, you know they are going to pull back together. That is what these ribbons do. Notice here, tightness on the ribbon, over here, tightness on the ribbon, over here, tightness on the ribbon. Look at the correlation. Look at where those MACDs are. Flat on the 0 line, on the 0 line, on the 0 line. That's very, very important for us to realize. The tighter the MACD is on that 0 line, the more likely it is that there is no momentum to take advantage of. And when you see no momentum, you are not to move. It is ill-advised. You're going to get yourself into a very, very choppy space. All right, so good study video here. Love it. I've been working on this for maybe 5 or 6 days. Finally got it set. And again, this is going to be one of the methods that we step through in the new Fast Track. It's extremely visual. It's extremely useful. It just uses a very specific tool set within a specific trading platform. And that's why we have other mechanisms, because not all of us have MotiveWave, though all of us should have MotiveWave. But if you don't have MotiveWave, we're still going to be learning a lot of other trading techniques to add. And this is a beauty. So enjoy, rewind it. You're going to need to, and figure out exactly what it is that we are setting up to do here. If you have additional questions, shoot me off an email. I'm ready to answer you. Take care. I'll see you tomorrow.